There you go.
It's pretty good. All right, let's get into money. Real quick.
Mine was better.
I think yours was better. I'm going to rate.
I was rushed.
Yeah. Well, you linger.
You
You
rushed
linger.
Me. You rushed me.
Yeah. Well, you linger. A little bit.
You linger a little bit.
So love you, but all right. So rates, lowest rates in more than a month for some anyway. So that's the headline this week, and we're not back to the March levels, but we are down again. So we're locking people again now at 3 1/8.
Okay.
3 1/4, 3 1/8, 30-year fix. So really nice. Here's where it's not as nice. So what they've done is they say, okay, here's kind of where the market's at, but we don't like certain things. They don't love cash out right now. So you're going to see a pretty significant hit on cash out. So we have a lot of people doing cash out for the home remodels thing, right? They're exactly like you, but unlike you, most people have to borrow the money. They don't have it sitting in a bag, right? So we're going and we're, doing a cash out refi. So then the rates end up being a little bit higher, but higher is 3.5, 3.625, 3.75, depending on credit, LTV, all that. But still good, but they're getting some hits on certain things they don't like. The senior.
I just want to ask you a quick question. So Wells Fargo announced today that they were going to stop all consumer loans, all second mortgages and credit lines and those types of things.
Yep.
Are they also? Is there any talk that people are going to just stop with cash outs completely?
Not stop, but they'll put a hit on it so that it will become unattractive.
Okay.
Right. So no, we still do them. 4.5.
Right.
5. I mean, and again, 4.5
is
great rate, right? We've been around way too long.
Yeah.
Sure.
4.5, wonderful. Take it. 5, wonderful.
To me, anything under 6.
Under
is
6,
I
right?
just forgot. I have a line of credit over at Deerwood Bank. I totally forgot about it.
Of course you did.
Probably shut
Right.
that off.
Huh?
They
No,
probably
it's
shut
It's
that.
there. I get. I get a statement.
You go to right, but you go to draw on it now, and they'll say, "Niet."
Nah, not for some people. All right, so that's kind of where rates are at right now. So,
Where are rates? This is like my conversation every time about this. Investment real estate rates. I'm at 4.75 on my place.
4.75.
4.75. Now that's going to adjust down.
Yep.
Because it's an adjustable. So come September, I'm sure
you'll pop down a little bit.
Pop down.
Yeah. Right now, if you're doing investment property and normal if you're doing 25% down versus 20, right, you'd probably be in high 3s yet, low 4s. If you did 20% down, you're probably mid 4s in terms of where rates are at.
Yeah. So,
wonderful.
Yeah.
Right. Wonderful. Right.
So even where I'm at on mine personally,
you're great.
Yeah,
I mean,
because it'll pop down.
It'll drop down a little bit. I'll give you some kind of ranges. This past week, again, about 3 1/8, 3 1/4 on 30-year fixed, and we've gone the 52. The new some of the new charting we use, it gives you the high and low over the last year, which is kind of cool. So we've been all the way down to where we are now, 3 1/8 to 4 1/4. Right? Remember we had that little spike.
Everybody's freaking out. Oh,
right?
Rates are the highest they've ever been.
It's great in a way, right? So put yourself in our position. Great, right? So it's, all of a sudden it's at 4 and oh my gosh. Well, what did that create? A sense of urgency.
Right.
So now it's like, hey, we're down to 3.5, 3 3/8,
Right.
3 1/4. Hey, we can pop 3 1/8. Let's go. Great. Or what we're doing a lot, to be honest with you, is we're going 3 1/4, 3 3/8, 3.5, using that premium and getting rid of costs. So it's literally we're hardly having any additional costs coming.
Well, yeah,
because
the rate's so low that you can fudge around with it and get paid back and clear up some costs.
Fast. And we had some people that just wanted to take a little cash out. Well, you can take up to $2,000 cash out, so we're structuring it so they get $2,000 cash out. Do some other things. They're maximizing
on a purchase,
on a refinance, and so we're doing some things like that. Just to give them a little bit of cash, and then you get your escrow refund. You skip a month's payment. We try and schedule it so we can get maybe 1 or 2. So we're doing things just to help change cash flow for people. So that's been fun. Our purchase business is really, really good right now. So that's kind of fun to see. So that's coming good. One thing I wanted to touch on as well is just this the coronavirus mortgage bailout program that continues to get questions every week for us. There's people that have to use this forbearance deal, and it says that it's not supposed to affect your credit. But what the language says, unless your lender has agreed not to report it, which all major banks will report it, your forbearance will not be reporting to credit bureaus. But mortgage forbearance is less damaging to your credit score than a missed payment and helps you avoid foreclosure.
which is true.
Which is true. Yep. However, understand that if it says forbearance, it's still going to be a little bit of a hit. So just if you can make your house payment, please make your house payment. Right.
Yeah.
And boy, there's a lot of push. Ginnie Mae, it's going to cost about $8 billion to servicers. I mean, one of the reasons why you're going to see a lot of shift in our marketplace, and you even saw it with AMEC selling, there's just a lot of shift that if you're servicing loans, you have to make the first 4 payments when a loan goes into forbearance. You have all these huge companies like Mr. Cooper, some of these huge companies that service a ton of volume, going, okay, as people start to say, yeah, I can't make my payment, the first 4 are on the servicing lender.
Mm-hmm.
Wow. That's a big number that's hitting these companies. And
so you think that's driving their decisions? And that is based on the crap that's going around right now in the country, right?
Correct. Yep. So it's really frustrating. It's interesting what's going to come out. I mean, I look at what the owner of Supreme's doing. I mean, he looked at a couple bundles of FHA loans and said, okay, what if we bought this? Because people are selling their servicing books, So he bought a couple servicing books for pennies, but then did the matrix and said, okay, if this many people need a forbearance, we have to make the first 4 payments. What's this? Maybe
Sure.
we'll just make the payment form. So and made a really good business decision to take on some servicing in the midst of all this, because people are selling it that don't want so much exposure. So it's been pretty interesting. But again, we're having a lot of Zoom meetings. I'm learning Zoom. And we're doing some of that stuff and talking to people. So 651-231-2500. If you want to have a conversation about where your rate is at, whether they should refinance or purchase, we'd love to have the conversation.
Thanks, Kelvin. That's it for this week. Log on to hittnergroup.com. See you next week.
You've been listening to your Real Estate Chalk Talk with the Hittner Group, the leader.